Hello and welcome to the closing beat, everybody. Happy Monday to you. How you doing out there? All is good? We are financial advisors here at Jazz Wealth, and while other advisors are playing checkers, we're playing chess. Today's interesting story was a position exit strategy for a client that had company stock, public company, but also had a brokerage account with other stock, and we were trying to figure out their capital gains and how to really make it look like they lost so they wouldn't have to pay taxes there. Legally, of course, but kind of fun, right? So if you're looking for a financial advisor, come join us here at Jazz Wealth. Hey, we have a winner. It's today, right?
We do.
Oh.
Make all that noise. Sorry about that. Yeah, Gabriel L. is our winner from last week there.
Aw.
Why aw?
It wasn't. So.
Oh, no, it moved quite a bit between Thursday and now.
Aw. All right. Well, congratulations.
Yeah, congrats. I mean, we can be excited for the guy. Congrats to Gabriel. A lot of familiar names just above him that had really good guesses, but just didn't work out there.
All right. And by the way, are the comments still coming on Eric's shorts there?
Dude, people really didn't like Eric's salmon shorts. They're not pink. They're salmon.
Salmon color. Not a burnt sienna, not a Georgia clay, but more of a salmon color.
Yeah, people really didn't like it. That was a weird one.
I'm not sure I understand that one, but hey, I've been picked on plenty of times too, so I'm totally cool with that. Eric takes it hard when you guys pick on him there, so I guess he was wearing some shorts or something, and you saw his shorts and didn't agree with the style. He's a man's man, but he's kind of like, he can wear that stuff. Yeah. He's got the California face, he can wear it. I can't do it. I would love to, but you got a face for radio, you can't get it done. Anyways, let's get started here. One of the things I want to point out in our notes from Jazz here this weekend, I talked about volatility, and on our wine and wealth as well. I fear that a lot of you are getting too complacent with volatility. It's one of those little sneaky things that you can do that really traps you when the market has a sharp move down. And when I say sharp, I mean just like quick. Right? Not like a catastrophic crash or, it's 20% down. I mean those quick down days. If you are getting a little bit comfortable with the volatility in the market and you're like, it's kind of sleepy, this feels good here, you get in a little bit of trouble there. Remember that when you're building a portfolio or someone's managing your portfolio for you, if you're using an advisor, you want the least possible risk for the highest possible return. That can be calculated, and that is important. In anything else that we do in life, we want to try as little as possible to get the biggest reward, right? I tend to use exercise as the example there. All right, let's take a look at the S&P here. Right off the 50-day moving average, that's where it found itself supporting itself on Friday. And we come into today, and thanks to tech, that pretty much drove everything higher. If you look around, you find out that the semiconductors were the big mover there. Lots of upgrades, lots of analyst comments, particularly on NVIDIA. From Morgan Stanley, you had some Goldman Sachs comments out there, Wells Fargo as well, Needham, Susquehanna, I believe, put something out to kind of talk about how NVIDIA is still an opportunity, and that blows my mind. I get the long-term view of it, which, remember, that's what they're talking about, but in the short term, that obviously drove the stock higher here today, and congratulations if you happen to own it. The S&P. I want you to remember something here, that August tends to be event and news light, but market weak. Right? So you tend to see that where there's not a whole lot to grab onto, not a lot of news events, the last little bit of earnings, so it's retail driven. Remember, banks start earnings, retail finishes it. So a lot of questions there wrapped around their margins and people just flat out walking out of stores with stuff apparently. I saw some clips on that. I don't know if that's new or not, but yeah, I don't know how we do that. But so far so good, right? And so far normal for the markets, right? To see this kind of August weakness, a little more volatility in there, totally normal there. What we've been seeing is rebounds on weakness and selling into strength. So that, what does that do? That creates volatility, right? So you got to get ready for a little bit more of that volatility. I'm not saying crash, collapse, devastation, chaos, and all that stuff. I'm saying this is normal. This is a seasonal type event that we normally get to expect. And I'm going to add one more thing for you here just to show you something cool. We like to show the presidential cycle in terms of performance of the market. So what we've done is we've taken every year's performance of every presidential cycle, whether you're an R or a D, it's really all we've had. We take a look at that. Year number one of a presidential cycle tends to be positive, just a slight, and I would call almost average gain. Year number two, historically, for not all presidents, but on average for presidents, tends to be the weakest of all of their years of just doing a 4-cycle thing. And if they had 2 cycles, then we repeat 1 and 1 and 2 and 2, right? Or 2 would be 6, 3 would be 7. You get what I'm saying? And so if you take a look over here, year one is done. Mr. Biden, President Biden is all done with that. President Biden done with number 2. He had the same sort of behavior, just a little more volatile. Year number 1 was good, slightly above average. Year number 2 was a little bit tough, slightly below average there for him. So far, year number 3 is playing out just as expected, where we start off with a nice little rally, just like he has done. You've seen it, just like the market has done. But what I want to point out is going into the end of the year, which is we're past the halfway mark. You see where we're kind of trending here. You see anything exciting there? So add that into the comments that I make about volatility. Volatility known to increase in August. Actually, I'm going to go a step further here, see if I can show you this. There we go. Volatility is known to increase in August. And remember what I shared with you before, this was actually a couple months ago. We talked about people pricing in volatility going into this part of the year. So we know volatility goes higher in August, and the futures traders were already pricing that in. Add that to what I just shared with you a second ago, and you say, well, historically, this time of year is weak. For the presidential cycle, it tends to be weak. Obviously, we wouldn't use this as our own benchmark to decide what to do, but it's kind of cool to see multiple things just line up piece after piece after piece, and you say, okay, you know what? If we underperform from here, if we say that the market has some good days, some bad days, and it kind of works its way up here holding its gains, that's normal. We're totally cool with that. But what you probably shouldn't expect is an outperformance, a massive, just great rally that doubles what we've done so far this year. It's, of course, welcome if that happens, but we would kind of be caught off guard by that, right? All right, like I mentioned here today, in the S&P was led by the semiconductors, in particular NVIDIA. We already talked about that. No need to go back to that one again. If you look around the semiconductors, you're going to find a lot of good things there, especially towards the top of the performance list. You got Micron Technologies participating as well. Of course, AMD with the little rally there, little compared to the others, but still impressive. Broadcom as well. And as you work your way down the list, even down to some of the lesser known names, KLA 10 Core, same thing. They're all enjoying that bounce. What can you do from here with that? Let's say you look at semiconductors and say, okay, I missed today, but I'd like to participate going forward. How do you compare strength to just participation? You know what I mean? Like which stocks are really strong and which ones are just going along for the ride because people bought the sector as a whole and it's part of the game. You know, they get to do that. Here's what you do. You look at the semiconductors there, see where they stand. A little bit oversold. Go back to something like KLA. There you go. Did that sell off as much? No, not quite as much. People were holding on to KLA a little bit more. Back to the 50-day, did not break the 50-day and slightly above. So using a little bit of common sense, a little bit of technical analysis, you could look and say, that's a little bit stronger. Okay, NVIDIA, not quite as strong. It's just more popular, and it's one of the bigger holdings in the semiconductors, so something you can sort of further fine-tune and look through. Micron, it's known for being sloppy. This is a great example. You could see it on the screen. It's known for being a sloppy sort of trending stock. More volatility. Still a little bit stronger overall. Not quite as strong as KLA 10 Core, but you get what I'm saying there. Okay, moving along down the list here, we've got gold. It's the U.S. dollar, I believe, hit a, U.S. dollar hit a new high today for itself. Yeah, it's going to be a new yearly high there. It's what's going on over in China. Real estate woes kind of creeping up there again in China with some issues with their bigger, this isn't that Greenland one. This is the other company. I forget their name. I can't think of it off the top of my head. Oh, come on. What was it? What's their name? Anyways, what they're trying to restructure some of their debt. And so that bleeds over into here. The Chinese yuan taking a little bit of a break. Compare that against the dollar and you have, ta-da, a little bit of strength in the dollar. whereas a lot of people think that the dollar has no strength left in it. If we go over to bonds, yikes. More downside for bonds. This is historic right here, by the way. I don't say that often, but this is genuinely historic. So the rapid deterioration in bonds means higher interest rates, of course. And so what happens here? Every single treasury yields, real yield is more than the S&P. That wasn't like that just a couple years ago. Remember when the S&P's dividend beat every bond note that's out there? 1 month all the way to 30 years? Well, flipped it upside down now. So now every treasury yields more than the S&P. What's that tell you? People don't need to be in the market to get yield. It was a time just a couple years ago where we had to be in the market to get any yield. Even if you were the most conservative investors, you had no other choice. You had to be in the stock market. Hence, the rally that we saw. Now, we've talked about this throughout the year, billions, now hundreds of billions of dollars moving over to the bond market because that's the more traditional conservative safety type play. And so you've got that move. What does that hurt though in the stock market? Okay, money leaves and goes to bonds. What about money that sticks around and says, I want to take a little bit of risk, but I want that higher yield? Those are dividend stocks, right? So dividend stocks this year has really gotten kind of the raw end of the deal here. You could use like the DVY to take a look and see the underperformance this year. There are people buying dips, of course, but underperformance in dividends. So it got me thinking, what does that look like? Let's have some fun with this one here. So what you're going to see on the screen is just a fun way of looking at this here. The first bar, this is the performance year to date of all the S&P stocks that do not pay a dividend of any kind. It's 101 names still, 20.43%, okay? In the middle, that is the 100 highest yielding stocks. That was for just a little bit lazy there, right? So only putting 100 in there. Oh, underperformance. Looking at the S&P, right? Oh, okay, a little bit different there. Isn't that interesting? So the stocks that pay no dividend, of course, that's where everybody wants to be. We need growth. The rest of the money that would normally say, I want to be conservative, I want to take my shot on some yield and stuff, and a little bit of growth would be fine. Okay, that's dividend stocks. Nobody's as interested. Is that good news or is it bad news? See, I'm a contrarian. I look at that and say, so you're telling me there's a discount. If I could scoop up some of that stuff with maybe the timing of the peak and the rate hikes there, maybe some people would come back and realize that discount. Other people look at that and say, why am I participating in dividend stocks? I'm getting a lower yield than the bond market. I'm not getting any growth. It's not outperforming or anything. So I'm underperforming what I could be doing by taking less risk. What did we start by saying today, right? We want to do the least amount of work to get the biggest possible return. You've got to look at it that way. Probably through the end of next year is probably the game plan for that. Okay, so I rambled a little bit there. Let's move on. Stocks in the news. You got Apple in the news here. Do you like your Apple Watch? They're doing the Apple 10th anniversary of the Apple Watch. I think it's called Apple X or Apple 10, something like that. Anyways, so that's going to be coming out there. Some leaks and pictures and stuff. If you're one of those Apple nerds, you want to check that out. That's cool. AMC. I wish we archived minute by minute. We do have to archive these shows, but I wish we archived minute by minute. What did we mention right smack there on, we can actually find the day, on July 24th. What did we talk about? Be careful. Why did it go higher? They were trying to work a new deal, a new restructuring plan where they could sell off stock. They could dilute you. And everybody bought that stinking stock. And on that day, I remember talking to you saying, you better be careful here because if that goes through, you're going right back the other way. That's unfortunately what happened today. If you look at AMC, they did officially get board approval to do what they're calling their stock conversion plan or revised stock conversion plan, something like that. Yeah, you're getting diluted, right? They don't make any money. It's a tough business. But yet people still want to play in that one. Why'd you see such a big down day today? That's all the emotional people that chased going, oh no, I don't want to lose that much. And they sold. Causes your little stock to go down there. All right, U.S. Steel. Cleveland Cliffs was trying to buy them out for $35 a share, something like that. The deal got rejected by U.S. Steel. The projection is they're going to maybe come back with a little bit better of an offer there. We will see what happens. And Nextera Energy, if you're in Florida, you know this name. This was talked about in Barron's here. They said this is a low-risk, discounted play with a 2.7% yield and rising, that was going up, and it's discounted. I think I said that already. By the way, Nextera Energy, just doing a little research to make sure I wasn't coming on here just reading off a headline, as I give you guys grief for that all the time. Did you know Nextera Energy has beat the S&P? Don't count this year, but it's beat the S&P 10 years in a row. This will likely not be the 11th year, by the way. That is not also, it's not very common for a utility company to outperform the stock market. So kind of cool. I didn't catch the whole article from Barron's there, but that's what they were talking about in the news over the weekend there. Tomorrow we have earnings. Remember, this is sort of retail season for as far as the earnings season goes. A little bit of healthcare names left over, but usually it's just retail. Home Depot will be the most obvious one that reports tomorrow. And I think I saw, what'd you say, Cody? Tell me the stats on Home Depot again.
They beat on earnings 86% of the time. They're positive the next day 49% of the time, and they've only missed on earnings once since Q2 of 2014, I believe.
You see, he wasn't looking at anything either. He read that up. Oh, it's on the Twitter there at the old Jazz Wealth on Twitter. No, it's X. Do we say X now?
There were rumors that, Elon was submitting the anonymous buys to buy U.S. Steel so he could have ticker symbol X for Twitter. But
oh, yeah, buy the whole company. Yeah.
Yeah.
I don't know that that's going to be a factual comment, but these days, I guess you never know. So the point being, Home Depot, and well done there on the stats. Home Depot, although it has a good, strong track record of beating earnings, and I would suspect that the same thing's going to happen again tomorrow, it is only positive about half the time. It's a very tricky play to play stock in general, just the pure play stock play. Very difficult to do that, but they'll report. We'll see what happens there. You also got H&R Block, and you have Agilent, which I think they changed their earning date for some reason, so that'll be tomorrow. And Cardinal Health. Remember, just a handful of health companies left, or healthcare sector stocks due to report. So we'll take a look at that. Let's see any questions that you have, and we'll wrap it up for a Monday summer. No, it's end of the summer, really. Joseph saying they were a very light-colored salmon. Oh, he's going Barbie salmon, I think is what he's saying.
I see where he's coming from. Yeah, no, it makes sense.
Did you even notice on the day he wore those?
Didn't even think twice.
Didn't even think twice.
I wear maroon on a daily basis. Is that bad? Now I'm thinking through everything.
Never noticed.
See?
Never once noticed. It's like the kids that spend all this money on shoes. How often do you notice shoes?
No.
Well, oh, Shawshank. Comment from Shawshank. I mean, how often do you recognize a man's shoes? See what I did there?
I got nothing.
But unfortunately, I did not catch him. He just does that. He wears these things, and we just kind of go with it. I don't know. All right, let's see here. What do we got question-wise? I think Alex, yeah, new PayPal CEO there from Intuit was your guy. I don't know how he'll do. Hopefully he does better than Bob Chapek did at Disney. Let's just go with that. J-Dub, NVIDIA to 500 in a week. Oh, just for you. Yeah, only for you. I'll go new highs, man. Yeah, over 500 just for J-Dub, just to really rip him. I caught your emails and I realized you were just venting, so I didn't respond. I didn't want to put fuel on the fire there, but you hang tight, man. They were really hard on a screen. Well, lesson learned. I don't know that I've ever worn, do I have salmon shorts? I don't think so. I'm gonna get some now. I'm joining Team Eric. I'm going with the team here. You know what I mean? I don't know that I'll, wear them on a camera, but, KMB 124 is what you're looking for there. Oh, you want the discount. Yeah, look at what happened. I mean, this is, you may not believe in technical analysis or whatever, but just follow the emotion of what's happening here. Rallies have been sold. Then there were 2 straight days where there was rallies that it could have very well shown it was trying to put in a bottom if it closed near highs. Didn't do it. Sold off. The next couple days go by, every attempt to get sold off. Somebody or some people believe that this is not something they want to be in so badly that when it just kind of moves up, they say, good enough, sell the stock. And look at what's happening there. That could be just enough. Yeah, I'm with you on that one. Opinions on adding to Albemarle. Here it is oversold. Yep. It's a tough one. I had a client ask about this one earlier here. They've owned it for a long time. We're considering getting out. My thoughts were, hey, this is going to have its rally. Why don't we use that to sell into instead of just selling because we coincidentally talked on this very day? So if you have it or you're, I don't know what you're doing with it, but, expect to see a little bounce there. Use that bounce to do whatever you're trying to do. Yeah. Yep. Very cool. Very cool. By the way, that's, let's see. You got 6 weeks down in a row, right? 1, 2, 3, 4, 5. This could potentially be the 6th week, right? How often does Albemarle go down 6 weeks in a row without bouncing at all? I don't see, right? Without any bounce? Oh, close. Nothing. You could use the research site to check it out. There's nothing going back here to 2020, which is as far as I'm going at the moment. How come everybody expects the Fed to cut rates next year when they hit the target 2% rate? Why not keep them high until they close? A little ammo. I think they had mentioned that in the past, that that'd be a good goal for them. If they could have a sustained inflation rate that was around their 2% target and maintain higher rates, that they'd be okay with that. Why? You're saying, why would they immediately just start cutting rates and fuel this thing again? I don't think that's their goal, based on 3 Fed meetings ago. Of course, they always say, we'll adjust with the economic indications that they get, so I don't know. Plantair under 12. I mean, no, I don't know. They need some bad news there. That'd be quite the reversal. Would be. Coke, so no matter how you play, what ticker symbol you choose to use here, I'm not one that gets excited about this. I don't like chasing right after the first pullback, right? So I get it. Big earnings move here. The other ticker symbol's the same thing. It is the same exact thing. Big earnings move. Momentum seems to be drying out a little bit. Use it. Let it pull back. Maybe just check in on it every couple days. Yeah, Fortinet, you bought 1,000. All right, so you're going for it there. Fortinet got 1,000 at 56.70. So I applaud the patience. Oh, good entry. Well, what's the goal? So Joseph, I'll pick on you a little bit there. So when you buy a stock, you obviously had very limited risk here and an excellent entry. You chose some spot to admit defeat, right? You have many multiples of your total risk in the play. Seems like a quick winner to me, no? Remember, when you're individually buying stock, you cannot win in the long term. It's misleading because it feels like you can. You can't win in the long term unless you are rewarding, or your winners reward you by many multiples of your risk, right? You can be, Jim Cramer's got like a 54% success rate when the people that track him. That's actually really good. Look at the winners, how they outpace the risk he takes on the losers. You will lose. It's okay to have losing positions. We got to have some sort of benchmark there. And if you're a client, I'm not trying to sell you, but if you're a client, I actually did classes on that. I got a whole spreadsheet that I made out for people to actually use and say, well, how many multiples is it? So you don't have to do a lot of work. It's very important. It's also how you track the success of your entries, which, by the way, very, very good entry there. So well done. Okay, I'll wrap it up there. Get out of your way for today. Not a real busy week, so we may use this as like an educational type week, play around with some different ideas. Got a few in my head already. But you guys enjoy the rest of your day. And by the way, congratulations to Gabriel there for winning Guess the Dow. If you want to play, jazzwealth.com/guess the Dow. And you're welcome to play along whether you're a client or not. Enjoy the rest of your day or evening, and adios.
Hey, Dustin.
Yeah.
Everything good?
Yeah, I'm good.
Sure, everything's good?
Yeah, man, I'm fine.
Okay.